We got Logan Bartlett here.
What's up, guys?
What's up? How you doing?
Good.
There he
Thanks for
is.
having me on.
It's great to have you. It's great to have you. How's the reception been to the market update? You getting any pushback, or are VCs already sort of making threads or based around your content and sort of making it their own?
Yeah, well, we were done like a week or two ago with all the content, and then obviously the market went crazy, and we had to like redo, I don't know, 50% of the slides or something. So I thankfully it didn't end up being too stale. We froze all the data on Monday, and Tuesday, Wednesday it ended up actually being pretty tame in terms of the market trading. So I think people can rip off all the slides for their annual meetings that are coming up here in the next couple of weeks. We're happy to open source and take credit for it.
Give me the one-liner. Is it so over? Are we so back? Are we poor? Are we rich? How are you feeling?
Private or public?
Let's start with public.
I don't know is not a great answer, but I would say it feels like we're in for a lot of bullshit that is flowing through the system, and uncertainty just isn't a great thing for any business. And while it's not going to impact software companies or technology companies quite as much directly, like the end customers for a lot of these different businesses are going to be impacted in a meaningful way. And so until we get a little bit more clarity on to what end all of these things are being done and what sort of the end state is, I don't know how you price in anything going forward. And so now that obviously changes by the minute here. So it could be we're at some steady state here in the next couple days or hours or weeks or whatever it is, and this ends up all sort of feeling kind of stale. But right now I'm not particularly optimistic about what's going on in the public markets. I heard some Morgan Stanley equity research person said that coming out of their conference, which was a week ago, they said it was the most negative sentiment that he had heard, I think with the exception of the onset of COVID in the last 10 years, from people sort of like looking at the markets. And I assume that's just a factor of uncertainty, but
Yeah. Do you think there's some sort of like Doge efficiency meme that's working its way through the market right now? Like I remember when Elon came into Twitter, X, laid off a ton of people. There was this big question about like, well, what other software companies could do something similar? But is that, now that you're seeing it done at the federal level, are companies thinking like, hey, maybe we should pull back a little bit on the investing and scaling?
I think we've sort of seen it over the last couple years, or at least the last 18 months or so. If you go look, one of the slides that we put up in our deck was sort of the trade-off that's occurred between growth and free cash flow. And to some extent, that's the macro environment, but also I think it's just the knobs being pulled a little bit between layoffs and hiring freezes and all that. And so I think people have made the conscious decision that they can do more with less. And I think AI is only going to continue to pull that trend forward. Is it cutting to the bone like Doge maybe is doing, or Twitter did? Probably not. People aren't taking it to that extreme, but I do think people have really recognized that there's knobs that are a little bit more pullable than they would have appreciated otherwise. And I mean, if you look at the big software private equity folks, the Vistas and the Thoma Bravos of the world, like they've been doing this for the last, it's 10, 15 years. I just think it wasn't something that people really tried to do in the public markets. And now we're seeing that actually occur in a more meaningful way.
For you as a multi-stage investor, what advice are you giving to the sort of average Series A founder? In many ways, like we could have massive sort of GDP could go negative, but if you're a high growth software company that's just sort of hitting your stride, you can still thrive. How are you kind of advising, your portfolio companies around sort of downstream capital? Because as Redpoint, you guys are also, a fund that can participate in some of these later stage rounds as well.
Yeah, I would say that at least the last 5 years has sort of felt like, so I've been doing this now for 11 or 12 years, and the last 4 or 5 have felt like twice as long as the first half of my career, just in terms of all the changes that have occurred. That said, it does seem pretty uncorrelated what's going on at like a high level macro with the early stage funding environment. I think to some extent, what happened after 2000 was the sophisticated LPs really pulled out of the funds that they felt had gotten too bloated or too big. And that's happened this cycle as well. I think if you talk to smart endowments or pension plans or stuff, they've definitely, as fund sizes have gotten to $3, 4, 5, $6 billion, like those people have raised eyebrows and maybe voted with their feet to either scale down or walk away from those funds. But there's a lot of other money that has willingly and excitedly run into those big fundraises. And so I think you're seeing sovereign wealth and Middle East people come into those funds and give them, two, three, four, $500 million. And so it ends up kind of being a rounding error if a smart pension walks away or endowment walks away. So the way that impacts the startups, I think it's just at a very micro level, like continue to execute and the funding will be there. At least that's the way it seemed over the last couple of years. And I guess it's true until it isn't. But all this stuff sort of feels outside of the control of the individual founders. And so I would encourage people not to worry too much about it.
Related to that, I remember when the market crashed kind of around, I don't even know what we have the term for, interest rate, like post-ZERP era, SVB crisis, post-ZERP. You were talking to, maybe it was Emil Michael or someone, but about this idea of like, there's a lot of dry powder and there was a lot of optimism from entrepreneurs being like, well, the VCs have the money, they're going to have to give it to us anyway. And you were kind of explaining to folks, well, like the dry powder isn't necessarily sitting in their bank account. Like they have to make capital calls. The LPs might put pressure on them. Like funds might get downsized. But it feels like maybe now the dry powder narrative was real. And now like all the VCs figured out how to start deploying again and deployment rates are up. But how do you tell the story of the post-ZERP era to where we are now in terms of just the pace of capital deployment?
Yeah, it's a great question. I would say I've been surprised at how consistent people have been able to fundraise. And I think there was really a triaging or kind of a hollowing out of the middle that occurred, or maybe the tier B, if you will, a tier two funds, where you saw a handful of those folks blow up or really struggle with their fundraisers in some way. But the names that everyone thinks about or knows, I think there was a concentration and consolidation of capital that came in. And then you couple that with some of our friends with seemingly endless amounts of oil money coming into the sector as well. And it just sort of feels like we're in this new normal state where there's a lot of capital going around. And I don't know exactly what's going to cause that to change. It feels like there wasn't a ton of reckoning for sins that were made in 2020 and 2021. It feels like people were able to get a mulligan and say, hey, you know what, like, yeah, we got a little crazy, but now we've really doubled down and focused on what it is that we do well. And people seem, at least on the LP side, seem to be largely forgiving. Or if they're not forgiving, there's someone waiting to take their place in one of these name brand funds.
I mean, it feels like, there's gyrations and oscillations in the American early stage technology market, but where are you going to go if you don't invest in American technology?
It's sort of like we all read the same books. You look at the founders today and like everyone's read Innovator's Dilemma or everyone's read the case study of Blockbuster, Netflix. And so we're dealing with a far more sophisticated, like, entrepreneur that's executing, or CEO that's executing on AI right now. And I think similarly, like all the LPs studied what happened after 2000, 2001, like that was actually a great time to lean into the asset class. And so now we're at this prisoner's dilemma where it would be theoretically a great time for everyone to lean in if other people backed out, because then prices would depress, but everyone's staying in. And so it's actually leading to prices staying elevated, which has been interesting. I mean, I think in the last couple of weeks, it feels like I've heard the meme or a refrain that it's like so 2021, or it's got 2021 vibes all over again. This was pre the last 7 days, and so I'm not exactly sure how that's going to play out. But that's definitely been the sentiment in the private markets from the VCs that I'm talking to, is just sort of like, gosh, this feels like we're running this back and doing it all over again.
Yeah.
Yeah, I've had that. I've had this feeling multiple times this year where a portfolio company is just raising like a big up round, and depending on the lead, I'm just thinking like, wow, I really wish I could sell into this round. Like, even though I'm a believer in the company, it's just like, getting so far over, and the narrative is always there, right? Like, I'm thinking of like one company in particular that will go unnamed, like really, really strong narrative, really strong traction. It's just like setting prices at a point that, basically pricing in the next, potentially decade of growth. And if that's the case, as an investor, you ideally would want to get out and then just invest, rotate into another illiquid
because you're done.
asset.
You got your growth.
Do you get excited? It's such a feature and a bug of the private markets that you're not like beholden to the mania, and you sort of get to play a long game in anything you're doing. That when I talk to my private or my public market friends, like they're envious that you can take a morning off and not have your entire world implode, versus the public markets, like stuff can hit the fan and your entire day could totally change at a moment's notice. The flip side of that is you're really in for a long period of time, and you don't get to say, well, I'll take a few chips off now because I think probabilistically there's a better opportunity that could come down, and it feels like this is a good risk-adjusted return. That doesn't really, that's not as accepted in the private markets. I think increasingly, though, we're finding some of the financial products for that. And I've seen more people, or at least more opportunities, to take a little liquidity. I'm not sure it's totally socially acceptable, at least for the institutional funds to do it. I think it's far easier if you're an angel. People are a little bit more understanding of that, but it does feel like we're trending in that direction.
It comes down to volume, right? If I put 25K into a company and it does well, that and I want to sell the position, it's very different than you with like, we have a $400 million position here and we're rotating out. It's like, there's probably not the demand. What just one, I don't know if you feel even free to speculate on this, but something I've been confused by was, the figure round getting priced around $40 billion. Like, what in your mind do you think is the play there? Brett's last company SPAC'd, you could imagine figure, I think a pure play humanoid stock would do well, at least a little while in the public markets. But what do you think is some of these later stage companies that are still a ways out from like true commercial adoption, but especially now with companies like CoreWeave, the CoreWeave IPO, it seems unclear now if they're going to get out. But like, what's your read? Are any of these companies going to get out in the next year, other than some of the bigger names like Chime?
I've heard so a few different things there. I guess I've heard I don't know if you guys have heard different things with CoreWeave in the last little bit, but it seems like there's a few people that are still kind of all systems go on IPO and are going to plow ahead. And CoreWeave certainly doesn't ask my opinion, but if I were counseling them, it feels like just get out there. And I think having some AI story with probably a bunch of institutional managers that want exposure to some derivative direct trend of AI, I would say it's probably as good a time as any, especially when some of these bigger contracts are coming up in 2017, 2018. Like, get out when you have a little bit of, certainty of those cash flows coming from the NVIDIAs and the Microsofts and the OpenAIs of the world. Like, I would encourage them to go. On the figure thing specifically, so I looked at Brett's business Vettery, which predates the last one. And I actually really enjoy, I haven't talked to him in, I don't know, 8 years or something, but I really enjoyed that interaction. Now, that was like a job marketplace or something. So very different than, now he's sort of become this like hard tech founder, which is interesting from a job marketplace thing. The thing that I don't totally understand about Figure and that round itself, and this is a common phenomenon at the, not the end, but at the peak of a lot of cycles, is you end up with a lot of these SPVs getting formed in a meaningful way, and you end up with managers trying to get write bigger checks for rounds than their funds can actually hold. And so it's hard to know exactly what the incentives at play for some of those names. So I don't even, I wasn't familiar with the names that they're talking about in leading those rounds, but it certainly seems from a fund size standpoint that those people probably can't step up and write those checks themselves. And so then you wonder, what are the incentives at play for whoever is writing those checks? Like, what are they thinking about? And like, what is the executive team, like, what is their incentive to raise at this price? And all these things.
I looked at it as, if you're going to price it at 10 and say this is a pre-IPO round, we are going to basically, we're planning to SPAC the company in the next year, we think it's going to pop. That type of round makes sense. But if you're pricing it at 4 times that, roughly, it just feels like, how do you actually get out of this? Who's going to get out of this position? Do the employees actually benefit? But that's just one example.
Skill issue. SPAC at 80.
SPAC.
Why not? Why not?
I do think there's this retail demand for. I mean, if I were OpenAI, I would try to get out sooner rather than later, right? Because I think there's this demand both from institutional and retail to have exposure to some of these things. And if you look, I mean, Palantir's where they're trading, and obviously there's a bunch of different considerations around that business. But like, I think that if you went out and floated just a small percentage of your overall business, I think that there could be a lot of nice liquidity to fund a lot of the CapEx, and you would trade at a really healthy premium. So it'll be interesting to see who of like the big model companies actually tries to get out first.
Speaking of going public, do you want your private market investor competitors to go public, the General Catalyst? You're excited? You're like, yeah, I want you to go from,
I want to be able to see your fund returns.
Yeah.
The disclosures are going to be
It's
crazy.
an interesting thing. Our structure is not one that we can or ever will try to have the ambitions of doing that. I saw when people there's certainly funds that act or either call themselves have leaders that are more akin to a CEO than they are investment partner or something like that. And so I think from a financial engineering standpoint and like institutionalization of the asset class, I'm excited to see people try these things. The cynical side of it, when I compare a venture firm to a private equity firm and think about the incentives at play. So if you're a private equity firm, if you're Apollo or Blackstone or BlackRock or whoever it is, right, and you're this big entity, the people within your firm can't really leave and compete with you because there's so much institutional infrastructure around, one, the quantum of dollars that you actually need, but then two, the relationships with the debt providers, the ability to process the deals, the ability to get access through the bankers. You can't just go hang a shingle or go join another competitor to compete with Blackstone or Apollo or whatever it is, right? In venture, it's so beholden, I think, at least to individuals, and individuals can walk out the door and they can go raise 100, 200, 300, 400 million dollars and like effectively compete with you in some way, shape, or form. And so there was an information report, I don't know if it's true or not, talking about GC moving from more carry to bonuses. And I don't know if it's true. Information tends to do a pretty good job reporting, I think. And like that was reported alongside some people leaving the organization. And you just wonder, like, as the incentive structures start to change and you start to be more institutional, how do you retain the quality of people? So like at an intellectual level, I'm very interested to see how all this plays out. And I respect anyone that's like innovating in some way on a structure that has been stuck in some version for a long, long time. I'm very curious about the practical implications of how it's going to work with like retaining individual talent and all that stuff.
Yeah, that's been my big question. If you're somebody that wants to get into venture and you believe in your picking ability and you think you can be one of the greats, wouldn't you want to get the sort of maximum benefit of that by getting carry and being a part of a partnership versus I invested in the next Slack and I got a one-time little bonus.
Exactly.
Who knows how it'll work, but I can imagine.
It's hard, and especially since the next option, if you can't compete then it's fine. You're kind of locked in. Like Goldman bankers or Morgan Stanley bankers or Apollo MDs or whatever, it's hard for them to get the scale to go out and really compete. And sometimes they do and sometimes they don't. But like that RSU structure, bonus structure kind of works when you can't really walk out the door and hang a shingle and compete. Yep. Venture, you kind of can. And so I think it's, if you're good, you know, you can go raise. We see a lot of these solo capitalists or whatever, like small $300, $400, $500 million funds out there. And so I think, I don't know, retaining talent is going to be an interesting thing to see.
Have you, like last question on this point, have you seen the sort of solo GPs overpaying to win deals? Because like that's something like, you know, sometimes you see these sort of obvious power law companies like the Andurils of the world with Elad Gil sort of like, you know, leading rounds. And that makes sense. I think there's sort of consensus now that Anduril is going to be a really massive company. But when you see a solo GP come in and write a $100 million plus check, does that ever, what's your read on that? Because from my perspective, sometimes those marks don't even feel real when there's something to be said of like, okay, Redpoint like underwrote this and like, they're like an organization and a firm, and it's not just like, one or two, major, so how do you look at those rounds? And I'm sure oftentimes you're competing to win those rounds.
Yeah, it's so I guess I've seen less of that phenomenon than probably 2021, and I would have to rack my brain a little bit to think about like the big institutional solo capitalists, or I think those terms are directly at odds with one another. But the big solo capitalists that can write those checks. I mean, Elad can obviously do that, and he's the one that certainly comes to mind. I would say, honestly, there's been some firms that have continued to scale where I've probably seen that more than any individual kind of solo capitalist out there. And I think there was this thing where in 2020, 21, it felt like we rotated to the brand, where we lived in this world where everyone was just a Zoom screen away. And so, Mark Andreessen and Doug Leone and Keith Raboy and whoever could be in the room as quickly as I could be in the room, because time and space weren't really constraints at all. And so in that world, I think there was a big gravitation to the big institutional funds, because it was like, oh my gosh, I'm going to get Mark Andreessen involved. And that's amazing, right? It feels like we've rotated a little bit more back to like, who is my individual board member? Who is going to be on the ground with me day to day? Like, I'm going to solve for that person rather than the soul, like just the brain past a certain point, right? Sure. Like, obviously you must be this call to ride the ride with some things. And so you got to have enough credible brand as an institution, but then it comes down to the individual a little bit more. And so I would say I've probably seen more than the solo capitalist thing. I've probably seen more of, hey, this fund has a bunch of money and you might not be getting their number one person. It could be their, whatever, their reliever out of the bullpen that's coming in to do the round. And those are the ones that they're like really juicing the price a little bit on these things, because they want the asset in that way. So I think that's something that I've seen more and more of late.
I want to go back to the innovator's dilemma. And I heard you on a podcast maybe 2 years ago, right when the ChatGPT moment was happening, debating, is AI a sustaining innovation or disruptive innovation? How do you sit with it now? How are you seeing it get adopted in the public markets, and what narratives are taking hold there?
I still feel like there's an analogy that was made to me about Google, and it was talking about the Americans in World War II, that like we got every opportunity to ultimately do the right thing and come into the war and like help determine the outcome. And I think that was the analogy I had heard about Google with AI, that like they have all the things to their advantage, be it the distribution of Google SEO, be it YouTube content, be it whatever it is, like the talent, the team, the dollars, all of that stuff to like figure this out ultimately.
Yep.
We'll see if that actually proves to be the case. But I do think that that is largely true of a lot of the incumbents in different sectors. And so the analogy that I think I used back then, and I think is still true, is like if you go back and look at the Salesforce of mobile, that was still Salesforce. It was just like a mobile app of Salesforce.
Yep.
And if you go look and kind of go down the line, like how did Netflix or Facebook, there wasn't like a mobile Netflix. I mean, I guess you could say TikTok is mobile Netflix in some ways, but like there wasn't a pure play mobile Netflix, like a Quibi that came out and was actually disruptive in some ways. And there wasn't Facebook. There maybe Instagram was the one that like kind of hopped on being that, but still it was like, it wasn't totally net new surface areas that ended up manifesting themselves around that stuff, or at least it wasn't immediately in the fullness of time. Maybe it could have been if Instagram had stayed independent, or what TikTok's been able to do. I think that seems to be the case here today, where we're going to see these things that are new and novel within AI. And I draw akin to the Ubers or the WhatsApps or whatever it is, where these businesses that couldn't have been possible without AI are going to form a lot of independent equity value.
Yep.
But a lot of it's going to be captured by incumbents in some ways. And I think in mobile, Apple and Google probably capture the lion's share of like equity value that was created by the mobile iPhone or whatever. Like those were the ones that really, through the App Store and the actual phones, they captured a lot of it. And I think in large part, maybe with the exception of OpenAI, like the vast majority of the equity value will probably end up accumulating to the Facebooks and the Microsofts and the Googles and I guess OpenAI as well. But I still think we'll end up with hundreds of billions of dollars of equity value created for, the derivative companies akin to the Ubers and the WhatsApps and the whoever else.
Yeah, I had this take I was noodling on yesterday about it feels like Apple's missing the AI moment, but does it matter because Microsoft missed mobile and they still made it work? How do you feel things are going with Apple Intelligence? Obviously, that John Gruber article kind of shook everyone to their core. Do you think they're in trouble, or is it overhyped, or where's the narrative sitting with you these days?
So the Gruber thing, I mean, obviously, Gruber's like the GOAT of Apple coverage. Yeah. And so you got to take everything he says almost like biblically in some ways. That's totally like the canonical gospel of Apple, takes. But I have always hated Siri. Like I have always hated it. And then the Apple Intelligence thing and the summarizations on the text. I mean, I love that. If only as a meme, like I enjoy screenshotting it and sending it back to my friends. And like, that's the best use case of Apple Intelligence I've seen. And so like when making fun of your product is like the best instantiation of your product, it's probably not, you're not on a good trajectory there. Culturally, it just feels, and this is probably more, John Gruber or Ben Thompson than what I profess to know about. But it just feels antithetical to Apple's culture to execute on AI in the way that I think you need to. Mm-hmm. They are very like measure 35 times and cut once, and let's do this all secretively, and let's like try to control the ecosystem and keep everything like insular in some ways. And that is just so antithetical to AI. And AI is about like proliferation and getting it out there and getting the data and taking the feedback loops and moving fast and trying new things and iterating. And like, I just think that's directly at odds with who they are. And so I don't know how you change that. And I guess to your question, does it actually matter? I don't know. They have such lock-in, right? What is Apple's market cap today? I mean, is it like a $1 trillion business? Sorry, $3 trillion business? Yeah, 3.2 trillion. It's like, I think they're probably going to mess this up. And I'm not sure it's going to matter for them as a business. And I think the sooner they realize that they won't be able to execute on it, the sooner we get these things in our product as as a partnership rather than
just open up the APIs and let the ecosystem flourish, and let me change out the button for a different Siri.
Well, the other
they
thing
lose
that
nobody, but it's fine. It is. I still buy the phones.
The other thing that nobody really talks about anymore because it just hasn't been possible is M&A.
Yeah,
like, Apple has so much cash. If there are breakout, consumer like products that make sense as part of the Apple ecosystem, there's a there's a world in which they could actually just buy those companies and
yeah,
sort of
everyone
integrate them.
quotes the 60 billion on their balance sheet or something, but Apple has returned over $1 trillion of cash over the last like 14 years. Like it is a cash generating machine at a scale I don't think we've ever seen
Given
in
their
history.
acquisitions, I think that's probably a better use of capital than what they bought to date.
Yeah,
They've
maybe,
not been the best
maybe.
acquirers. You know, it's crazy though. I mean, they were Siri was acquired for
Yep.
them like I don't know, 13 years ago or something,
Yeah.
14. Like they were early on all of this stuff, and so
Oh, yeah.
clearly there's some like broken execution elements, at least within, you know, how they've gone about it
Yeah.
to date, which might not matter in the grand scheme of things.
It's a deterministic culture, not a probabilistic culture, and so it's misaligned with AI.
I like that. That is very Ben Thompson or Benedict
Pithy.
Evans of you.
I'm trying to be more pithy.
Yeah, I like it. I like it.
We got really no time left, but I wanted to give you an opportunity to talk about Ramp. You when they announced the new fundraise, you kind of like were poking a little bit of fun at yourself because you basically
You got found the local top, but not the global top.
Well, and I think you invested a couple times during.
I
the
did.
ZIRP-
Yeah,
the
we
ZIRP
invested in
era.
$1 billion and then like
Oh,
three
that's
and a
great.
half and then 8 or whatever,
There we
8.2
go.
or something. Yeah, it was a long run from there. Funny enough, that round that we ended up investing in at whatever 8 billion or 8.5 or whatever it was, what's a couple hundred million among friends. But
Yeah.
that was like December 21 when we were talking about it, and then the round ultimately closed in January or February or something. And so it was really last boat off the island in terms of like internally the zero interest rate kind of mindset. And the thing that I've learned, and this has been the last 5 years for me, basically since I joined Redpoint in December of 19, officially started in March of 20. And what I've realized is like price very rarely within some zone has mattered. And when I find myself iterating a little too much on like, oh, I'll do it at this price versus that price, it probably says something about what I think the ultimate outcome for the business can be. And when it's been the investments that have worked the best are the ones in which I'm like, I don't know exactly how this is going to play out or where the ceiling is on how this company can execute, but I just need to be in business with these people, and let's just see where it goes from there. And obviously, that's easier when you're talking hundreds of millions than it is low single digits, which is easier than high single digits, which is easier than double-digit $1 billion. But like that mindset is one that I've internalized, where it ultimately says something about the quality of the company if you really think too hard about the difference between this price or that price. And so the funny thing about the Ramp investment was the entire time for the last 3 years, I was like telling our team internally, it's like, I don't know when this is going to stop growing or what the ceiling for this can be. And at some point, we're going to get to the other side of what that round was a couple of years ago. And so that was the first like public validation that it really felt like we had crossed that chasm a little bit. I think probably 9 months ago, a year ago, it sort of felt like an inevitability that we weren't going to get stuck at, you know, some maximum that was beyond that. But yeah, I mean, the team just continues to execute at a level that I've never really seen before. And I know you guys know them well. And so it's been a fun one for me to be a part of and kind of work alongside.
Well, this conversation has been presented by Ramp, like every conversation.
Go to ramp.com to sign up. Easy to use corporate cards.
By the way, all my conversations quite literally are presented by Ramp. I think my ability to do this job at this point is presented by Ramp in some capacity. So you guys have quite literally the ad play for it, but they keep me in business as well.
That's
amazing.
Great.
Thank you so much for coming on. When's your next? Are you going to do? Is this report? I feel like I see him twice a year, or is it quarterly?
I think once a year-ish is usually. I mean, this one I think took a lot out of our team internally. There was a lot of late nights and weekends on this one, so I think we're going to give our folks a little bit of time, a little bit of a respite before we run it back. But who knows? I mean, the market keeps up. We get more tariffs. We get things a little crazy. Maybe we'll need to come out of the woodwork, and you know, when the theme music plays, you got to emerge.
For sure.
Last question for you. We have Sam Lesson and Seth Seth Rosenberg from Greylock
And
coming
Slow.
on and Slow coming on to debate AI in about an hour. Who do you
think's gonna
coming
win?
out of, is it
Let me
just
give you
nobody
guys a little
wins?
bit of advice. As someone that has moderated a debate
Yes.
with Sam Lesson before, let
Yes.
me give you guys a little bit of.
Please.
I would encourage if you have mute buttons on microphones, I would encourage you to jump in and try to steer the conversation. Don't be a passive participant.
I
in
remember
it
this
because
one.
people tend to be really mean to you when you do that, and you let the filibustering go on between him and, let's say, I don't know, Zach Weinberg theoretically.
Yep.
I would encourage you guys to be active participants in that conversation.
We're excited. We got our boxing gloves. We're gonna throw them on. We're gonna get in the mix.
Hey guys,
Anyways,
keep up the great work. I'm a huge
thank
fan
you.
of what you guys are doing. I
Appreciate
appreciate anytime you want me, I'm here.
Thanks
Always
a lot.
welcome.
Yeah, we'll
All
talk
right,
to you
guys.
soon.
See you.
See ya.
Bye.